Hello everyone, welcome back. Today we are solving 2025 May-June paper 13. This is the first part of the video. So we'll be solving from question number 1 to 10. Question number 1. What are disadvantages of operating as a partnership compared to operating as a sole trader? Number 1. Partners may be liable for the actions of another partner. This is the disadvantage because we have multiple partners managing the business. So if one partner takes incorrect decision, then all the partner has to suffer or bear the loss. Number 2, profit to be shared between the partners. So partners has to share the profit. So that is one of the disadvantage. And third one, there is a risk of dispute between partners. Yes, if we don't have proper agreement or if partner has different views, then there could be dispute in the future. So all these three are the disadvantages of partnership. So correct answer for question number 1 is A, 1, 2 and 3. Question 2. A business has following balances at the end of a financial period: non-current asset, trade receivable, trade payable, profit for the period, drawings, and long-term loan. What is the closing balance on owner's capital account at the end of the financial period? Okay, so before we solve this, let's understand the profit for the year or profit for the period and the drawings adjustment. This would be adjusted with the capital, and profit for the year will be added with the opening balance of capital, and the drawings would be subtracted from the opening balance of the capital to find out the closing balance. Now, this information was given to us at the end of the year, so we assume that this too is already adjusted and we have some capital amount. Okay, and that capital amount we need to find. And we know that as per the accounting equation, asset equals to capital plus liability. And if we reshuffle this equation, assets equals capital plus liabilities. Okay, now if you shuffle this equation, then we can have assets minus liabilities equals capital. You can see that, right? So let's write down the assets. We have the non-current asset of 102,000, and then we have trade receivables of 39,000, and then this is a liability. This too is already adjusted in the capital, and this is a liability. Okay, so these are the two assets. Liabilities that we have is 27,000 and 50,000. Okay, let's add this. So total asset is 141,000, and let's look at the liability. And the total liability is 77,000. So I said that asset equals to capital equals to asset minus liability. So capital equals to this assets minus this liability, so which is 64,000. So at the end of the financial year, the amount of asset is 64,000. So correct answer is B. Question number 3. A sole trader uses the double entry system to record their business transactions. Which transaction does not follow the double entry rule? In this, the first entry, the expense account is debited at the end of the year when there is a prepaid expense on that date. This is incorrect because when we prepare the expense account, when we pay expense, that time we'll write it on the debit side. Okay, and then at the end of the year, we transfer the amount of the expense in the statement of profit and loss account. And if there is any prepaid expense, for example, okay, and when we pay expense, we'll write down cash here, and then we pay amount, let's say 5,000, but the total expense of this year is only 4,200. So that amount needs to be transferred to statement of profit and loss account. Okay, 4,200. And the remaining amount will be there in this account as balance CD. Balance CD of 800 here. And then we'll make total. Let me just write it here. Top and bottom. Okay, so this side is 5,000 and that same total on this side 5,000. So difference was 8,000, which we wrote it as balance CD, and then this would be your balance BD, which is 800, and this is a prepaid amount. We are not writing separately that entry, okay, prepaid amount entry. So this is incorrect. So this does not follow double entry system. Whereas capital account is credited when sole trader introduce a personal computer. So this is the addition of capital in form of personal computer. So computer account debit and capital account credit. Second one, provision for motor vehicle depreciation account is debited when the motor vehicle is sold. This is during the disposal. We need to transfer the amount accumulated depreciation of the asset that we are selling to disposal account. So the correct entry is provision for depreciation account debit and disposal account credit. So this also follows that. And last one is purchase account is credited when the sole trader draws goods from the business. So when you are taking the goods, we'll write down drawings account debit, and because we took goods, so it should be subtracted from purchase at cost price, so purchase account credit. So all three are correct, this one is incorrect. So for question number 3, answer is A. Question 4. A business owns a property which is rented out to tenant. Which of the following costs should be treated as capital expenditure? A capital expenditure is a long-term expenditure which gives you a long-term benefit. Number A, extending the kitchen area, definitely capital expenditure. B, legal fee for a 5 years tenancy agreement. So this looks like a long term, but this is for 5 years. If I don't do it every year, if I don't do it for 5 years, I can do it on every year basis as well. So this is a revenue expenditure which reoccurs every year. Repairs, repainting the property. So repainting of the property is also revenue expenditure. This comes under repairs. And replacing the water pipe, that is also under repair. So that is revenue expenditure. So correct answer for question number 4 is extending the kitchen area, which is your capital expenditure. Number 5. Which statement describes factors that may cause non-current asset to depreciate? Okay, why there is a depreciation on non-current assets? A reduction in the estimated residual value of the non-current asset. So if the non-current asset residual value decreases, will that affect the depreciation? Will that cause the depreciation? No. Number 2, the introduction of the new technology making the non-current asset obsolete. So this is one of the causes of depreciation. Non-current assets is depreciated because of the new technology. Change in the estimated useful life of non-current asset. So either the non-current asset has 5 years, 10 years, 20 years. We need to calculate depreciation. So this is not the causes of depreciation. And the last one is physical deterioration due to increased use of the non-current asset. So physical deterioration is wear and tear of the assets. So these two are the causes of depreciation. 2 and 4. For 5, 2 and 4. D. D is your correct answer. Number 6. A business purchased a non-current asset which had an estimated life of 10 years. It is depreciated using the straight line method. At the date of sales, 5 years depreciation has been charged. The following information is available. So we purchase an asset. It has an estimated life of 10 years. We are charging straight line method of depreciation, and we are selling this asset after 5 years. Okay, so 5 years depreciation was calculated on that asset. Original purchase price is 1 lakh or 100,000. Estimated residual value when purchased 20,000. Selling cost 8,000 and loss on sales is 10,000. Okay, first let's calculate how much depreciation will charge on this asset. Okay, so depreciation formula for this is cost minus scrap value, and then this would be divided by useful life. It will give you the depreciation per year. Okay, so the cost of this asset is given 100,000 minus scrap value is estimated residual value, which is 20,000, and useful life is 10. So this is 80,000 divided by 10, that would be 8,000. So depreciation is 8,000 every year. Okay, so if 1 year depreciation is 8,000, then for 5 years it would be 8 into 5, which is 40,000. Okay, so total amount of depreciation that we charge is 40,000. Now when we sell this asset, these are the two things that happened. Okay, we need to pay for the selling expenses, and then when the loss on the disposal is 10,000. Okay, let's find out the cost of the asset is 100,000. Then the accumulated depreciation is 40,000. That means net book value on this day is 60,000. Okay, so if we sell assets for more than 60,000, that is profit. If we sell asset on less than 60,000, that is loss. Okay, but in order to sell this asset, I need to pay expense. So first we'll add expenses out here. So selling expense, that we paid is 8,000. Okay, so total worth of this asset, or including the net book value and the selling price, is our selling expense is 68,000. Now if I can sell more than this is the profit. If I sell less than this is a loss. Okay, so they say that we sold it at a loss of 10,000. Okay, the loss of 10,000. That means I sold this asset for 58,000 here. Okay, because this is your loss and this is your sales proceed. Okay, only if I sell this asset for 58,000, it will cover up 8,000 selling expense, and then we incur a loss of 10,000. Okay, so your correct answer for question number 6 is 58,000 C. 7. A business maintains control account as a part of its double entry system. Which error would cause an entry in suspense account? So we are preparing the control account. So why there would be an suspense account, or what entry cause suspense account? Okay, so suspense account, basically if there is a one-sided error, then we create suspense account. Let's look at number A. A purchase journal total 9,870 is incorrectly posted as 9,780. So while posting it from the journal to the control account, we wrote incorrect number. So it has nothing to do with the ledger entries. Number B, carriage outward is credited to the carriage outward account but correctly accounted for in the cash book. So when we paid carriage outward, the journal entry should be carriage account debit or carriage outward account debit and cash account credit. But we wrote in the carriage outward on the credit side. Okay, it means that this account is less on the debit side. Okay, we're supposed to be on the debit side, we wrote it on the credit side. Now because of this, the suspense account would be created. Your right answer for this is number B, carriage outward is credited to the carriage outward account. Okay, 7B. 8. Which item is not likely to be updated in the cash book when preparing a bank reconciliation statement? When we prepare the bank reconciliation statement, which will do not update in the cash book. Okay, so when we prepare the reconciliation, first we will look at the balance in the cash book and the balance in the bank statement, and whatever entry are not recorded in the cash book and only recorded in the bank statement will update it. Okay, so let's find out. Direct debit is only recorded in bank statement and not in the cash book. Okay, so direct debit means it is directly deducted from my account. Okay, I have some charges to pay, so bank has directly debited in my account that amount. Then the dishonored check. So dishonored check is also recorded in the bank statement. I deposited check in the bank, and then bank would verify that check, and if that check verification fails, then the check was considered as dishonored check, or we also say check bounced. Okay, so this amount would not be credited in my account, and that would be there in my bank statement. So I need to update that in the cash book. Number C, standing order. Here we give instruction to the bank that on this particular day pay this much on my behalf. Okay, so only difference between the direct debit and standing order is direct debit amount can vary. Okay, but in standing order the amount is a fixed amount. Like every month you need to pay insurance for the company, so insurance amount remains same every month. Okay, and then the next one is unpresented check. Unpresented check is recorded in the cash book and not in bank statement. So I have already recorded that in the bank cash book, so we don't have to update that in the cash book. So the correct answer out here is D, because unpresented check we do not update in the cash book, it is already recorded in the cash book. 9. A draft statement of financial position shows a bank balance of 1400. The following information is now available. Check issue but not yet clear by the bank. Bank charges not in the bank cash account. Lodgement in the cash book but not in the bank statement. Okay, which figure is shown on the bank statement? So this is the amount that we have as per our cash book. Okay, and we need to find out what is the amount as per the bank statement. So this is my cash book balance of 1400. Okay, and the first one here, check issued but not yet clear by the bank. Okay, I have given check to one of the supplier, but this supplier hasn't withdrawn money from the bank yet. So it is not clear by the bank, means bank still thinks that I have that money. Okay, so this amount needs to be added back as per the bank statement. And the bank charges is not in the cash book, so this amount does not include the bank charges, but bank already included that and then subtracted from my account. So bank charges needs to be subtracted. And then the lodgement in the cash book but not in the bank statement. In simple word, lodgement basically means deposited money. Okay, so we are depositing money in the bank, and that is recorded in the cash book but is not recorded in the bank statement. So bank does not know that we deposited 220 out there. Okay, so as per the bank, that amount does not exist for them, so that needs to be subtracted. Now let's find out, sorry, this is equals to, so as per the bank, they have $1,285 in their account. 1,285A. So for 9, A is the correct answer. Okay, the last one. Which items should be recorded as a debit entry in sales ledger control account? So sales ledger control account is prepared at the end of the year to verify arithmetical accuracy. On the debit side, we'll write down all those entries which will increase trade receivables, and on the credit side, we'll write all the entry that decreases trade receivable. Okay. For example, contra entry between the sales ledger and the purchase ledger. Contra entry basically means a supplier is your customer as well, so we settle the debt. I'll show you example out here. Okay. So you have a customer called A, okay, and then you sold him sales of worth 5,000. Okay, but this A is your supplier as well, so you purchase from him, let's say worth 4,000. Now if you want to settle this transaction, what I can do is I can ask A to pay 5,000 and then I can pay back him 4,000, or in simple term I can just ask him to pay me 1,000. Okay, this is more logical thing to do. So what happened out here is I subtracted 4,000 from my sales and also 4,000 from my purchases. Okay, and this adjustment in the sales and the purchase is considered as contra entry. So we need to subtract it from the sales ledger control account as well as in the purchase ledger control account. So it would be subtracted, so that means it is on the credit side. Okay. B, interest charge on the overdue credit customers. So is a customer but he did not pay on time, so we are charging interest. Now he or she is liable to pay more. So this entry will go on the debit side of the sales ledger control account. Okay, we sell goods which will come on the debit side, and that amount is due, and if he did not pay on time, then we need to charge him some interest. Okay, and that will also be debited in the sales ledger control account. So this is the correct answer. Let's look at C and D. Irrecoverable debts. So some customer would not be able to pay and they were bankrupt, so we need to write it on the credit side. Last one, total of the sales return. Sales return also decreases trade receivable balance, so we write this also on the debit side, sorry, credit side. So right answer for question number 10 is B, interest charge on an overdue credit customer's account. Okay, so with this we come to the end of today's video. This is the first part of video, so stay tuned for other parts, and if you have any question, do let me know. Till then, happy learning. Bye, have a nice day.